Hello, everyone, and thanks again for joining us today as we dive into another facet of the KingsCrowd business. If you've watched our other webinars, you know that we are actively raising capital to invest in key initiatives across our business. And today, I've asked our Director of Content, Aryelle Young, to join me and discuss how our content team is working to provide you, the customer, with timely insights, be it through analyst reports or market trends analysis. This webinar is really focused on giving you an inside look at the mechanics of how our team works to provide timely and actionable intelligence to our customers, and how we plan to continuously improve our product content offering to create even more value for our customers and our investors. So with that, Aryelle, thanks so much for joining us here today.
Hi, Chris. It's great to be here.
So before we get kicked off, I'd love for you to just tell people a little bit more about yourself and your background.
Yeah, absolutely. So I come to KingsCrowd with kind of a non-traditional background for finance, degree in creative writing. I've got some published short stories, but I actually find that to be a real strength in an area like this because really telling stories is universal, whether that's, fiction or something like an investment opportunity. Everything is a story. And so I like to approach pretty much everything I do through that lens of really thinking about audience and reader and what's going to translate and communicate the best for them.
I love that. And Aryelle is a superstar on our team and is truly at kind of the center of all of the different angles of our business. She definitely hears it from all sides, from product, from investment research. She's always involved in one thing or another. So one of the first things I want to dive into is something that's really important to our business, which is the analyst reports that we produce. Can you tell us more about what goes into those analyst reports and how we kind of define the structure of our analyst report offering?
Yeah, absolutely. So analyst reports, you can kind of think of them as the qualitative part of our investment intelligence, right? So we've got our ratings, which are quantitative, they're data-driven, and then analyst reports are sort of the other half of everything. And we've broken those apart into kind of a 4-tier system to kind of rank investment opportunities. So starting from the bottom up, we've first got underweight deals. And these are very high-risk investment opportunities that we think have a pretty low chance of giving investors returns. There's usually something really concerning about the raise, and we want to highlight that for investors. And in fact, this makes us one of the few places that not only tells you what to invest in, but also flags what not to invest in. And we really want to be transparent about those kinds of opportunities with our members.
Amen to that. So going off of that, one of the things that we wanted to do when we created our analyst offering product was, if you look at the public markets, right, they do something where they call it initiating coverage. Companies like Morningstar and Barron's, they'll create coverage where they say, hey, this is a strong buy, this is a buy, this is a hold. And so what we're really trying to accomplish here is to do something very similar, is to provide you with that explanation of, hey, here's the really exciting opportunities. It certainly doesn't mean they're going to be successful, but here's the really interesting, exciting opportunities, and here's where you may want to stay away from. And one of the kind of unique things I'd say about our offering is that, unlike the public markets, there is no sell. There's simply a don't buy, right? So your underweights are kind of saying, just stay away. Here's the red flags and concerns. Let's talk a little bit, though, about what goes into those analyst reports and how we actually generate them.
Yeah, absolutely. So the analyst reports are really the big area where our investment research team gets to shine. So we're seeing anywhere from 30 to 60 new deals every week. It's a ton to keep track of. And our investment research team, goes through companies and kind of flags interesting companies, intriguing companies, and then starts initiating coverage. They do due diligence calls with founders. So there's multiple calls, multiple hours of conversations that go into these reports to really ensure that we have the most accurate information. We're getting that in-depth insight that sometimes you can really only get from founders talking about their companies. And then, of course, we also conduct independent research on market sizes and how markets are growing over time, direct competitors, founder and key team members' experience, all of the really key metrics that you need to understand a startup and its potential as an investment. So hours of research and due diligence is going into every single one of these reports. And then our investment research team writes up those reports, and from there then the content team comes in and we kind of take over editing, some basic fact checking, and then really ensuring that the ideas being communicated are accessible and easy to understand, because this is where, that democratization of startup investing becomes really important, because not everybody's familiar with this, right? And VC has always been kind of a closed door environment. So our analyst reports are really meant to open this up to anybody and really explain, okay, so here's the data, here's what the data means.
Definitely an intellectually rigorous process that we go through. And one of the things that I wanted to highlight, Aryelle has worked really hard with the investment research team to continuously increase the quality of the analyst reports that we're producing. So there was a time where when we were a really small team, we would actually have to outsource and work with external consultants to help produce the reports. And little by little, we've worked to actually bring all of that in-house to really enhance the quality and make sure we're controlling every step of the process. So now it's actually a part of the analyst process that when you're getting hired, you have to make sure you're capable of writing an analyst report, because that's really integral and a part of your day-to-day job. But it's really helped us to increase and enhance the quality of that offering. One of the other things, Aryelle, that I'd love to dive into, obviously we are a data company at our core, but telling stories around that data is how you actually connect with customers. So can you tell us a little bit about how we go ahead and actually tell stories with our data?
Yeah, absolutely. So that's one thing that I think is so valuable, right? Is like we have this epically comprehensive database of startup raises, right? We have pretty much the most comprehensive database. And that gives us the ability to highlight trends and discover insights that really no one else can. But that's just it, right? Data on its own isn't particularly accessible. And so we want to find the story and tell the story in the data. And so there's a couple different ways that we do that. One of the regular ones is our Chart of the Week series that we've been running for about a year and a half now, I believe. And so with the Chart of the Week, we highlight trends or market patterns that we're seeing, in online startup investing. And so I'll kind of run through a quick example of one we published, I think about a month ago. So we can actually settle the debate on startup valuations. And our data shows that the conversation shouldn't be so much about valuations as it should be about whether a company is early stage or growth stage. Because we've seen that early stage startups, they're definitely not in a bubble. Their valuations have increased very marginally over time. It's a very steady, predictable rate. It makes sense, right? Growth stage startups, on the other hand, have definitely seen major valuation increases from January of last year all the way through April of this year. And in particular, you'll see April is kind of a major outlier there because there were a couple companies that had just insane valuations. But since April, we've seen growth stage valuations start to drop off, and they're down about 35% actually from where they started at the beginning of this year. So if there was a startup valuation bubble, it was only in the growth stage companies. And that's the kind of insight that we can really highlight.
Yeah, I absolutely love that. And I want to be really clear with people. I think what you're seeing here is that, we focus on the online private markets, right? Whereas in the venture world where people could kind of do whatever they want, when you are in the public eye, what it actually does is it depresses valuations and it keeps people more in line with expectations. And so what I think you're seeing is actually just a more efficient market is being created in this space where valuations are really transparent. And thus, if you want to be successful with investors, you have to come out with a more reasonable valuation. And that's holding things in a smaller band. Really cool insight. You're exactly right. That's the type of stuff that we want to help you understand as you're going about navigating these waters. Aryelle, another major lift that you take on each year, and I think is so important as a part of our branding exercise and a part of people really coming to trust us in this market, is our market intelligence report. Can you talk about what goes into that and the value that provides to our industry?
Yeah, for sure. And again, I'll just kind of show a little highlight here. So our market intelligence report is this annual comprehensive report that we put together on the stats basically of online startup investing. And so we're looking at how things have changed year over year, starting at the beginning of KingsCrowd's database, which is 2018 forward. We're able to compare not only your basic metrics like dollars invested and new deals, but we're able to look at deal success, right? The breakdown of how many equity rounds are successful, how many debt-based rounds are successful. we're able to look at regions. We're tracking, startups across the country. And so we can really highlight, like, are we seeing most things in the West, in the South? We can actually discover that. We're also looking at founder demographics to see how funding for underrepresented founders is changing over time, how things like impact investing is changing over time. We can look at industry performance, platform performance. It's just this really comprehensive, deep dive into how the market has been performing. And it is a major lift because, we have hundreds of data points on any particular startup, and now we're kind of aggregating that across a year, across a platform in a year. It's a lot to go through, but it really gives us the power to say, here's where things are going. And that's one of the most exciting things, actually, is then with all of this data, we can make, kind of rough predictions to say, we're seeing growth in this particular industry, or we're seeing growth across, these months in particular tend to have a lot of activity. Like, we can really narrow in and highlight specific areas and help people kind of set expectations for the coming year, know what's normal, know what's average, right? And that is more powerful than it sounds because it does impact a single investment decision, right? Even though this is a very high-level review of the market at large, you can say, okay, if I know average valuations in, such and such industry tend to be around 10 million, and you're looking at a specific deal and its valuation is, 25 million, well, that's really above average. So there needs to be a good reason for that valuation to be so high. It's that kind of insight that you can really bring into every investment decision.
I absolutely love that. And one of the other cool things that I have found is over the past, 6 months or so, I have seen us quoted in pitch decks for new platforms. I've seen us quoted in Forbes. People are utilizing our data to talk about this market because there truly is no other place to go and have all of the data in one place and to get those deep insights on what's going on within the market. Aryelle, was there anything surprising within that data that got you really excited or was just interesting to you?
I think one of the most inspiring things, honestly, comes with the founder demographics and seeing the funding for underrepresented founders. It's been a major conversation in traditional venture capital for years now that, minority founders and female founders get massively underfunded, right? It's like 2% or something just kind of awful goes to these founders. We are not seeing that in the online private markets at all. It's a third. It's anywhere between a quarter to a third. And when you put them together, it's almost proportional to the number of deals we actually see with these founders. So it makes it very clear that the biases that you observe in venture capital are just that. They're just biases because online investors aren't bringing those prejudices with them, and they're making investments, based much more on merit, on solution, and on investment potential. And that has, while a founder obviously brings their skill set, that doesn't have as much to do, with race or gender.
Well, I feel so deeply that for the past 2 decades when VCs have been saying, oh, we need to change our ways and we need to improve, and the numbers literally haven't improved one iota, you could say, well, maybe it's something structurally incorrect or broken with your market. And that's another reason why I care so much about us being here and existing, because we are the arbiter of this information to say, listen, we're not hiding behind any walls. We're just telling the truth. We're putting the facts out there. And the reality is this industry is solving a massive problem that has not been solved in a traditional venture world. And I think the more we can tell those stories and push that word out there, hopefully we bring more, light on this industry and help push people in this direction, because it really is a way in which we can improve funding for female minority founders and just everyone who's overlooked, right? I mean, it's absolutely ridiculous how the traditional venture system works. Well, thank you for that. Let's hop into another couple of things that we provide to our customers that I think are of really major value. Let's talk a little bit about the new deal sheet and some of the other kind of content that we put out each week to help investors navigate the waters.
Yeah, for sure. So, one of the big things obviously is trying to solve for pain points. And like I mentioned earlier, we're seeing anywhere between 30 to 60 new deals a week. It's a lot to keep up with. So we aggregate weekly our new deal sheet, and it puts literally all of the startups that just started raising within the past week into one document in one place. It makes, discovery much more simple and much more painless than it otherwise would be. And so we send that out weekly, both on our site and through emails, trying to make it, as easy as possible, deliver those insights directly to our members. One of the other things that we regularly produce is our newsletter, which is a comprehensive recap, right, of basically kind of everything we've put together again over the past week. So it's analyst reports, it's podcast episodes, our founder profiles. It's just a comprehensive recap to make sure that our members can, keep up with the latest investment intelligence that we're producing. With that too, I'll go into a little bit more of founder profiles are also a really powerful piece of content that we produce that you can't find anywhere else. These are exclusive interviews with the founders of companies that are currently raising capital. And it's a chance to really get a sense of a founder, right? To feel like you're having a conversation with them, and we ask about what inspired them to start their company, how they're differentiating from their competitors, talk about their key team members, how they brought them on board, where they think the company is going to be in 5-10 years. Just some of those key questions that you would want to ask yourself. And this is a really easy and digestible way to get that information directly from founders.
What I think is so cool about this is if you've ever been a venture capitalist or interested in becoming a venture capitalist, essentially the experience of being a VC is exactly what you'll experience on any given week utilizing the KingsCrowd product, because you get your new deals on Monday, they sit down on Monday and they talk about all the new deals that they're looking at. And then you start diving into a few of the companies that are more interesting, and you start getting more analysis on those and deciding which ones you want to invest in. And then near the end of the week, you typically will have a wrap with the people in the firm and go over, okay, here's everything that we looked at this week, which things are we further pursuing? And it's like you go through that life cycle by utilizing the KingsCrowd product and following our content schedule. So I just think it's really cool. Like it's actually like an open source venture firm that you get to join and just sit along and watch our analysts go through these processes. And then our content team helps provide all of that to you in a way that's easily digestible, which I just think is really, really neat. So Aryelle, let's dive a little bit into some of our initiatives and things that we're working on to continue to enhance our product offering.
For sure. So, I think kind of top of the bill is continuing to produce more analyst reports and just making sure that we're always improving the quality of our analyst reports. We do hear from our members, and I think the growth that we're seeing in the online private markets just makes it evident that there's definitely demand for high quality research on investment opportunities, right? It takes hours to really go through due diligence. And again, when there are dozens of deals, no single person really has the time for that. And so we want to fulfill that need. We want to help people make smart investment decisions. So increasing the number of analyst reports is definitely a priority with that. And, from the content team, we're dedicated to ensuring that those reports are continuously improving and just always getting better. Another thing that we're really excited to be kind of branching out more into is podcasts. We do already have one podcast that we're running, the Inside Startup Investing podcast, and that's been a really fun opportunity to bring in, industry experts, to bring in fund managers, founders, investors. It's really just this comprehensive inside view on startup investing. But we want to kind of branch out more, produce more podcasts that are a little bit more focused in some areas, covering what to invest in, kind of like analyst reports, but maybe a briefer, kind of easier to gather format of it. Also talking about how do you invest, right? There's a lot of people who may be coming to this space for the first time, and it can be really overwhelming. So producing a little bit more of a kind of educational bent to talk about how to invest and how to make decisions, developing investment thesis, these kinds of things. And then also, just meeting the movers and shakers in the industry, who are big names, right? Who's making waves? What are kind of the sort of current events, right, that are going on, and helping people keep track of that and be a part of the conversation. After podcasts, we're going to continue to produce our in-depth writing about data-driven insights. So that's like chart of the week, but we also kind of want to get more into market analysis, right? If there's electric vehicles, like let's say there's something going on with Tesla, with Ford, with GM, Are we seeing a similar thing in startups? Are these, market movers being reflected across the public to private space? We've got the data to show it, so we want to dive into that a little bit more. And then, like I mentioned earlier, education is always a big push, and so we're also going to be working to improve kind of our foundational series to help people get started in startup investing, really making sure that that's accessible, educational, and laid out in a kind of logical progression to help people feel like they're building skills and building their own confidence as they start investing.
A big part of our mission is empowering everyone to be able to invest confidently into the private market. So education right there as baseline is a requirement. But I think one of the things we've seen in this market is that we're still such a young industry, and there's still so many new people coming into the industry that when they get here, they're still a little bit confused as to why they're here. They're going, okay, there's a startup investing thing. I kind of get it. How is this different than stocks? And so there is so much need to have more education and awareness type products so that we can help connect with these folks who are still trying to learn the ropes before they're going to be fully comfortable and willing to actually jump in and make their first investment. And that's what we want to help them do. Get comfortable with the terminology, get comfortable with this industry, get comfortable with the asset class, and start going, okay, I can do this. This isn't rocket science. I wanted to go back to one thing, just talk a little bit more about the analyst reports. Can you talk to us a little bit? I know it starts with the data and then the analysts kind of take it over and they decide which ones they want to cover and so on and so forth. Can you go into a little bit of kind of the editing process and the things you go through in kind of analyzing the reports before they ever get to our customers?
Yeah, absolutely. So there's kind of a dual level to it is kind of how I think about it. There's your high level sort of structural organizational viewpoint on it, right? And for me, kind of taking it back to my background, it's about telling a story. And every story needs a good beginning and a solid ending. And if your beginning doesn't set you up for that ending, and if the ending doesn't have a strong takeaway, your story isn't going to get across, right? So when I'm looking through analyst reports, I want to see how are we introducing the company and what it's doing, the problem it's solving or the market it's going after, and what's the takeaway. And the takeaway should be pretty easy to identify. It's usually, is this a promising investment or is it not, right? And so making sure that that argument builds throughout the report so that by the time you get to the end, when the analyst says, and thus this is a top deal or this is a neutral deal, you understand exactly why that is. You as a reader are going, yeah, no, that makes sense. I can see it. This is a good investment opportunity, or this isn't really for me. And now I know exactly why. So that's kind of the high level aspect of it. And then, the lower level is kind of that really detail oriented part of editing. It's our name spelled correctly. Does the math check out? Making sure we're quoting things correctly, and obviously grammar, sentence structure, the nitty gritty things that most people want to stay far away from. But that as editors, that's our bread and butter, and it's also kind of fun for us. We tend to be very detail oriented people, and the placement of a comma, it matters.
Well, I've always been impressed by just the level of, even watching our Slack, the level of peer review and peer editing and going back and forth and making sure that we have all the facts exactly correct and that we feel really strongly about whatever market size has been selected for a company really fits that company and, and whatever market growth rate, whatever it may be, that we feel really confident that, yes, this is the factually correct answer to what it is that we're talking about. And I just think that's so important. And you've just seen improvements over time. It just gets better and better and better. And that is through a continuous improvement process that you guys are always going through. One of the other things I wanted to mention, as an investor in this business, you're investing in us so that we can continue to kind of build out the team. And so right now we have 2 full-time editors, including Aryelle, 1 part-time, and now we're actually working to hire 1 more full-time editor as well. And one of the reasons for that is, as you've seen, as this market has grown, right? When I started this company, you might see 3 to 5 new deals a week. We're seeing upwards of 60 new companies a week, and we want to provide more analyst reports. So guess what? as we produce more content, there's just a lot more editing that needs to be done. And as we provide more educational content and all of this type of stuff, we need more resources. So we are investing in our team to be able to support those initiatives. And it's your dollars that are really helping us to be able to accomplish that. As you know, we've already raised about $5 million in our Series A, but we're continuing to try to raise even more capital to really be able to invest in all of our growth initiatives and product initiatives that we have in front of us, to really make us that one-stop shop, the best place in the world to come to make, actionable investment intelligence decisions. And you can invest in us by going to invest.kingscrowd.com. Anyone can invest. When you invest, you'll get shares in KingsCrowd, and you will be helping us make our vision a reality, and hopefully we'll be, helping your own wealth goals over the long term. So thank you all so much for your support and for your time today, and have a wonderful day.